We had this gentleman on just a few days ago, and he was predicting, that chaos would break out and all that. And sure enough, less than a week later, the markets are dropping, going up and down. Financial planners are sending out all these notices, hey, don't worry, don't panic, the market's going to come back. And sure enough, just like magic, it just bounces back. Like, oh my God, it's like magic. So today we're going to be talking to a very dear contributor to our program. His name is Bert Doman, and he's been doing these forecasts, and he's the most accurate guy I know for the past 36 years. And he was the one that sounded the alarm on China a long time ago. This is in 2012. His book came out, The China Crisis. It was earlier than that, I think, right, Bert?
It was about 3 years ago.
3 years ago. So anyway, he was sounding the alarm and nobody paid attention. It was like, it's almost like the boy who cried wolf, and the wolf did show up. So anyway, he's going to tell us what's going on now, because in my line of work, there's a lot of what I call the old timers who are getting out. They don't want to write advisory letters anymore for one reason. It's corrupt. Markets are manipulated. You can't make an accurate forecast. The government and the banks and whoever else is in charge is interfering with it. So it's a very, very important program for you today, especially if your future is dependent upon the stock market. Also joining us today is Melissa Marlar. She's one of the producers of the Rich Dad Radio Show. And she's going to, anytime if Bert and I go too far ahead over people's heads, she's going to step in and say, we don't understand that. So our job is to educate you and also inform you why the worst advice you can give yourself and your child today is go to school, get a job, work hard, save money, buy a house, get out of debt, and invest for the long term in a 401k or the stock market. If you're still subscribing to those ideas, this is your program, because we have some very bad news for you. And the man we have on today is always with us. Like I said, very rarely do we bring somebody on so quick or so soon after their last visit. But it is so timely because everything he is talking about is coming true now. And I can't believe it. I was watching CBS television, the news, with Scott Pelley. He says, gee, I didn't know China was in trouble. And this is just a few days ago. And guys like Bert Doman and other guy, Richard Duncan, who's a contributor to us, they've been warning us about China for years. So, Bert, what's happening? Why is this marketing up and down?
Well, people got over-leveraged in China. The average investor is really a neophyte.
We're talking about Chinese or Americans?
In China, Chinese okay. In China. And 31% of the accounts being opened up were opened up by illiterate people or people who didn't even have a grade school education. Over 1 million brokerage accounts a week were being opened up. They went in there with highly leveraged. In the U.S., we can use 2-to-1 leverage. That's regulated by the SEC. In China, they had special ways to do it via these organizations or trusts, let's put it that way, the trusts formed by banks so that people could get 5-to-1 leverage. At 5-to-1 leverage, that means that if the stock goes down 20%, you have wiped out all of your own money. And this is what has happened. So now most investors have lost everything, including their farm in China. And that, of course, will have worldwide repercussions. You have to remember that about 50% of economic growth worldwide was China in the last 15 years.
Yes, but Bert, how many years have you been warning us that China was almost a Ponzi scheme, almost an illusion? How long have you been telling us that?
The last 3 years. 3 years ago, I wrote a book. I thought it was much too early in the early 2000s. I know there were some people talking about it. I said, no, things are getting very over-leveraged there, but they have so much catching up to do. China was basically in the dark ages 40 years ago, and they had a lot of catching up to do with the Western world. They were getting all of the technology from the Western world, 100 years' worth of technology they were getting free. And so that means that their economy could grow and grow and grow, and they could see these excesses accumulate without it endangering the economy. 3 years ago, I said they have reached the end of the road. Now is when the entrepreneurships should take over in the economic cycle, but it cannot do that in China because it's communistic.
So, but also, you were warning a long time ago about 6 million empty condos, and it's because all these investors were running in who believe that real estate is a great investment, so they just bought all these condos, and they're empty, right? But you were warning of this a long time ago.
Well, actually, it was 3 years ago. They had 64 million condos were empty, and but they didn't try to fill them. See, this is what people, they see the number and they misinterpret that. People use condominiums like we use a stock to put your investment capital there. As soon as a person lives in those buildings, the value diminishes drastically because the quality of construction is so poor that when somebody lives in there for a year or two, the whole thing starts falling apart.
But Bert, this is what was happening. Those 64 million condos was the cause of the boom. Every third world nation like Australia and all that, not Australia's third world, but they were shipping all these raw materials to China to build condos and factories that nobody would ever use, right?
Yes, and the much bigger investment, of course, was roads, airports, railroads, etc. And this is very good in economic development, but the return on investment for the country that invests its money, its reserves, it is nothing, basically. You know, everybody, all the bulls on China talk about China having $3.7 trillion in reserves. They said, oh, they have so much money, you know, they can take an economic crisis. No, that money is invested. It's invested in the ground, in roads. They don't have that money, $3.7 trillion, sitting in a bank or underneath their mattresses. That money is gone. So now they're starting to sell U.S. treasuries. They're starting to sell assets in order to get cash in order to fight their currency crisis.
So so today we're talking to Bert Doman. Like I said, he was on just a few days ago warning us that the stock market was going to come down. The reason we brought him back on is because when China devalued the yuan, the markets all started to crash. Basically, the Communist government of China had to admit that they were in trouble, and that's what happened, and all the markets are crashing. Meanwhile, back here in the States, these financial planners are calling everybody and say, hey, don't worry, it's only China. America is sound and all that. Melissa's going to be part of this program today. Any questions on this? Because what does it mean to you when you listen?
Yeah, I agree. My financial planner, I mean, the advice is always don't open your statements for a while. Just go ahead and throw them in the drawer. It's going to come back. Here's the history. So Bert, if I could, I just want to go back. When you talk about the fact that everybody thought that China had the $3.7 trillion in reserve, is there a false sense that in the U.S., I mean, is something like that exist here? I mean, if the bottom falls out, are we going to be okay?
Well, you see, we really have to go back to my book, The Coming China Crisis, 3 years ago. I said exactly, this is what's going to happen. And I said, most American investors don't care about what happens in China. They say, no, I will never invest in China, therefore I don't care. And I always said, it doesn't matter. I would never invest in China either.
Right.
However, it will infect the global system. I said, when China's crisis surfaces, you're going to see a tsunami throughout the Western financial world, and it's going to take down every stock market there is, and that's why you have to care.
And it's not just the Western world; it's the third world that supplies raw materials to China. Is that correct?
Yes, Robert, that is exactly correct. And people ask me, how do you make money out of a crisis in China? Do you short Chinese stocks? I said, no. You never want to short the Chinese stocks because they're so manipulated. Right now, for example, the only big buyer in China is the government. Everyone else is standing aside because the government has said to all the financial companies, ETFs, mutual funds, brokerage firms, you are not allowed to sell. Okay, well, if you're not allowed to sell, you're not going to buy.
The Chinese government said to the banks of China, the investment banks, you cannot sell?
That's right. You cannot sell. And they also said, if short selling is prohibited, and if you sell short, we will arrest you. And they also arrested yesterday the managing director of the largest brokerage firm, CITIC, in China. the largest firm. Today the news was that they arrested 8 other employees as well. They didn't say why. They probably were selling against the prohibitions against selling. This is what happens in a dictatorship. We have to remember that China is a dictatorship. On top of that, it's a communist dictatorship. How can you have anything worse?
Right.
So, Melissa, what's your question?
Well, I have another question. Why is the U.S. stock market back up today then? Why?
This is sheer manipulation. I've been writing about this for several years. After the 1987 stock market crash, okay, they got their, all of the big thinkers and hedge funds got together and so on. And in 1988, President Reagan signed a bill which was called the President's Working Group on the Financial Markets. Very long title. We call it PPT for short. That stands for Plunge Protection Team. Their office is in the U.S. Treasury in Washington. The guys there they have one mission, and that is to preserve orderly markets. Please look it up. If you don't believe me, look it up on Google. Just put in there the President's Working Group on the Financial Markets, and you will see what their mission is.
Once again,
when the market declines too much, their job is to go in there. They buy the index futures, and that puts the market up.
So that's why the market jumped right back up after it went down.
Yes.
So what you're saying, let's just say it, it's manipulated. The U.S. stock market is manipulated.
Absolutely.
Once again, it's Robert Kiyosaki, the Rich Dad Radio Show. I hope you're paying attention right now. For all of you people who believe in, American pie, the apple pie, the godmother, and the fairy princess, that your money is safe and people are looking out after you. For those of you who really believe that the stock markets are honest and clear and all this stuff, and the fairy godmother's watching out for your 401k, this is your program for you. So once again, Bert Dohmen is a professional trader, investor, and analyst. He's the founder of Dohmen Capital Research. He has been giving us analysis and forecasts for traders and investors for over 36 years. He is probably, in my opinion, the most accurate. But the trouble with being accurate, sometimes he's too far in the future for people to see it. So his website is domencapital.com. Please go to his website. His letter, which everybody in our company and most of my friends read, is called the Wellington Letter. And on August 17th, 2015, the title said, "Be prepared for the fall." And he wasn't talking about autumn. And Bert's been talking about China for a long time. There was basically an illusion that it was growing by 25% per year in the full employment. All they were doing was building these huge condominium developments, 60 million or 6 million are empty, plus these huge factories that are empty. And that's where all the money was going, was they're hoping for the boom to continue, but it never boomed. And now it's going to go bust. Any comment? And Melissa is our producer, but she's going to be here because sometimes Bert and I get into language and discussions that a lot of people don't understand. So anything you want to say so far, Melissa?
Well, I just have a quick question because this is what you see. The headlines always talk about Apple. I just wondered, Bert, so can you explain how Apple affects the markets? I mean, that's always one of the big headlines, and I don't know if that's the media trying to play to the masses, or can you just explain in layman's terms what effect is that, and why should we be watching Apple?
Well, Apple is the most valued company in the world.
And you don't like them, do you?
Capitalization. You take the number of shares outstanding, multiply it by the stock price, and you get the valuation of the company in the marketplace.
But you've been speaking out against Apple for a long time also.
Yes. Since the beginning of the year, I said Apple now has exhausted everything. They came out with a bigger iPhone. They had about a 2.5-year lapse in that, behind the competition. So there were a lot of people who are Apple files, basically, and they wanted that bigger phone that other people had had for a long time already if they bought Samsung. So there was a lot of pent-up debate. Right now, they have nothing else to come back with. They had the watch, which is a flop, and I wrote an article about that on Forbes. Then they had the Apple Pay, which has about 2.5% of all the payment. Samsung Pay and Android Pay can be used by most of the terminals that are out there. Apple Pay the retailer has to pay several $1,000s for the terminals. So basically, Apple now is also being used as a manipulative vehicle by the PPT. If you can manipulate the stock price of Apple, you are manipulating the major indices, and it's easy to do. So I've been writing for the last several months. I said, when Apple finally breaks down, the whole stock market is going to break down. And it finally did, and we put in an article on our website, domancapital.com, and said, why Apple is going to be a very poor investment at best. Very poor, and this happened. It started breaking down. So anybody who bought Apple in the last 6 months is sitting there at a big loss.
There's another big point to what Melissa's question is. Apple is held by most pension funds, mutual funds, ETF. Everybody's holding Apple. So when Apple goes down, I may not have any shares of Apple, but my retirement might, right?
Yes, exactly.
So
everybody has it. When everybody is in something, you don't want to be in there because the only thing that can happen then is that they sell.
So once again, let's talk more about the plunge protection team. You know why I want you to stay on this? Because most people do not believe our government is corrupt. Most Americans have this stupid idea that Americans wear white hats, like the old cowboy pictures. And they would never do that to us. When I mentioned the plunge protection team or the president's working party on the financial markets, they look at me like I'm some kind of whack job. Why are they doing this? Why don't they tell us more about this?
Yeah, I used to believe in the Easter Bunny, too, when I was a lot younger. But then I found out the Easter Bunny doesn't exist. No, it's unfortunate that people have come to believe this fiction that Washington is benevolent and they do everything for our good.
And our banks are on our side.
Yeah, and people I think have woken up. Right now, the popularity rating of Congress is 7%. 7% trust the government. So people have gotten a lot smarter, and you can see the popularity of a certain candidate that you know very well. And people have finally gotten fed up with career politicians, and they say, we need somebody in Washington who watches out for the country and for the people, not for their own pocketbook.
Do you think that's possible, given the size of this financial crisis? I mean, what could Obama or Trump or Hillary ever say to China to make this global situation better? Nothing.
No,
right?
They created everything that's in place for the last 20 years or more has created the conditions that we have now.
Right.
They have created this crisis.
But it's so big right now, there's no president, I don't care who the candidate is, that could save us right now.
Well, save us from what? You can. I remember in the late 1970s when we had double-digit inflation, the prime rate was 21%, and people said this is the end of the world. And I said, no, it isn't. We're going to have a big recession. We're going to have a big plunge in the stock markets and in the precious metals. But out of that will come another great profit opportunity. And that's what I expect right now.
No, but yes, I understand, but my question is there any candidate that's powerful enough to see, this is, what they're saying, don't worry, America's fine. Do you believe that?
No, I think it can be fine.
No, I understand.
America, this is the greatest economic power in the world. The people are industrious. The people are honest. You go anywhere in the world, you get screwed every time you turn around. You hear people. I have never seen generous people like you have in the United States. When somebody needs something, they always give.
But Bert,
I tell you, when we get finally a good leadership in Washington, you get rid of all the career politicians in the Congress and so on. I would back up the truck and buy every stock in sight.
Yeah, but what's the odds of that happening?
It may happen. Who knows? 2016.
Well, you're a bigger optimist than me.
Yes. But you got to be optimistic.
Okay, so let's go back, staying with the big picture, right? We were talking about the Thai bot crisis, and then we're talking about the Russian crisis, the long-term capital management. Yeah. Very quickly, can you explain what happened with the Thai bot crisis back in '97? I think it was, right?
Yes, there were two crises in the consecutive years: the Thai crisis, Thailand, and then the Russian crisis. Russia defaulted on its debt, and Thailand defaulted on its debt. Both countries are not that significant in the world. Thailand definitely is not, but they caused just tremendous crashes in all of the stock markets in the world. Many of the Thai stocks and the Asian stocks were down 80, 90% in just a month's time. And so these were small countries. Russia may be a big country geographically, if you count the number of acres, but, the economic power at that time was not very big. So these caused worldwide crises. And now you've got a country like China, which is 50% of the growth of the world economies in the last 15 years came from China, and that country is now in crisis. How can anybody say that this is not going to infect the entire globe? This is going to be very painful. And the next pain is going to come from the emerging markets. The emerging markets are now in such a terrible situation because their currencies have plunged 20 to 30% in just a month's time.
And much of their debt is measured in U.S. dollars.
Exactly. They have borrowed U.S. dollars because they were cheap, low interest rates, and they said, "Oh, that's fine." But they have to repay them in dollars.
So
now, if they convert their cheap money into dollars, they have to use 30% more, and they don't have it.
Once again, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. We're talking today to one of our more popular guests, Bert Doman. Once again, he was brought back early because he warned us. He said on August 17th, prepare for the fall. And now it's fallen, so we're just now bringing you up to date. So we brought him right back. I'm in the studio with Melissa Marlowe, who is our producer here. And we want to have people aware of what's going on globally. Every time, Bert, every time I hear those guys on CNBC say, don't worry, the U.S. stock market is fine, your pensions are fine, America is strong, we're growing. We don't live in a vacuum anymore, do we, as the United States? I mean, we're not just the United States. Everybody, I always say Apple isn't even an American company. It's headquartered here, but it's all over the world.
Exactly. You never want to believe these guys that come on TV. In fact, I've been thinking here the last 2 weeks, I said, watching this financial TV is dangerous for your financial health. Really, for the average person who cannot identify between what they hear and what is real, it's very dangerous. But I remember, this is so reminiscent of 2008, before the real crisis hit later that year. I wrote a book in 2007, Prelude to Meltdown was the title. And it was about the 2008 crisis that I'd expected. I said, this is going to be a 1929 event. Nobody wanted to believe that. Nobody wanted to believe it. And then in 2008, financial TV, I even wrote to producers and said, don't be so bullish all the time. Your viewers are going to go over the cliff. At least, have some comments on there that the markets are not as good as you may think. So, totally ignored.
So, I wrote my book in 2002, predicting the biggest stock market in history coming in 2016. But I also predicted there would be an intermediate crash coming around 2007. So far, our timing is accurate. Bert was God because his forecasts are so accurate. A lot of people didn't like his forecasts. I mean, they should have listened to you so they get upset with you. But anyway, he's been doing it for over 36 years. He now lives in Los Angeles. His website is domancapital.com. He's the author of Prelude to the Meltdown, which warned of the 2007-2008 crisis. And he has been warning us about the China crisis for years now, but I never understood why until I read another friend's book. Richard Duncan, who lives in Thailand, and Richard has worked for the IMF and the World Bank. He's also a part of our program. And he said the only reason the Chinese economy was booming was because they were building, condos that nobody would ever live in, and they were building factories that nobody would ever work in. So all the concrete and steel and all that was going to China, that made, the third world countries that supplied raw materials for China rich. So everybody thought China was going to go on forever, and Bert's been warning us it's an illusion. It's an illusion. So just a few days ago, the Chinese devalued the yuan, and people, don't worry about it. It doesn't affect us. Well, if the yuan goes down, that means life gets tougher in America. Also, our guest is Melissa Marlowe, and she's a producer, and she'll ask any question for the regular person out there who needs to understand. So I'm going to say what can the average person do, and I'm going to say there's a thing in physics that says two things cannot occupy the same space at the same time. In other words, if you have a one-car garage, you can't put two cars in it. So the reason most people are in trouble, they still have the old industrial age financials survival theme, which is go to school, get a job, work hard, save money, invest for the long term in the stock market, get out of debt, and all this stuff. So let's start with go to school. The same time China was coming down a few days ago, the Wall Street Journal runs this article that 6.9 students are now in default on their student loans. That means if they declare bankruptcy, their credit rating is destroyed before they even get a job. So, Bert, what would you say to people who say you should go to school? I mean, what can you do to do something different?
You've probably noticed, Robert, that over the last several years, we have read more and more articles in the national media about, is a college education worth the cost? And my answer to that is no. I put my 3 kids through a very expensive university, and I don't think it was worth it. I think they can learn much more with reading books, going online. Online education is so much better because you can choose what you want, what you think you need. You don't have to study all of this superfluous stuff, psychology, philosophy, how to be politically correct, special ethnic studies, etc.
Right.
They're wasting so much time.
But your kids
spend your time on important stuff.
Right. Your kids had a huge advantage because I met them. They're great kids. They have you as a dad.
Yeah.
You see,
Thank you.
It's the same as me, as I had my rich dad teaching me.
Yeah.
My poor dad was saying the same thing about go to school and get a job, which makes you an employee. And my rich dad was saying go to school and become an entrepreneur.
Exactly.
And that's what you're saying. Take control of your money. Next question is this. When somebody says I'm saving money, my point of view is why would you save money when everybody's printing it? What do you have to say?
Yeah, I agree. The money is really just confetti. I always call it confetti. And the only reason it has any value is because we need to buy things, and a grocery store doesn't accept anything else except currency or plastic. The plastic is going to become the rule of the land and the law of the land. I think longer term currency will be outlawed. Because they want to tax the underground economy, which is probably 30 to 40% of the economic activity right now. So we're going to go over to a digital system, which means that, of course, when your credit cards are shut off because you have the wrong political philosophy, then you get very hungry unless you're a good hunter.
Well, let me ask you this. What would you say to somebody right now who, like I said, you cannot put 2 cars in a 1-car garage? So
I didn't know you were a physicist, but that's very good.
but they're sitting there, saving money. How much money is the world economy printing right now?
They're printing huge amounts. The Federal Reserve printed about $4.5 trillion. All the central banks together in the last several years printed over $13 trillion. To compare that, the size of the U.S. economy is about $18 trillion. So, that's a lot of money that they've printed out of thin air. They used to have to actually print currency notes. And I remember going through the Bureau of Engraving where they make our money, and they were so proud. They had just gotten the new printing presses, and the person showing us there, he said, yes, we have the fastest printing presses in the world, Heidelberg presses from Germany. And, everybody remembers the German hyperinflation in the early 1920s. But now they don't need those printing presses. They just do it with a computer. It's called cyber money.
Right. So what would you say to that person sitting there right now with, he's trying to get a new car in the garage, but he's already got I got to save money. What would you say to them? What can they do?
What can they do for what? In regard to investments?
Rather than saving money.
Yes. You want to save because people have debt. That's the one thing everyone has. And what do most people not have is money. Would
you use savings as a long-term plan?
No,
that's what I'm trying to get at.
No, the best place to put your money at first is Get educated about what's happening. Read. This is how you fight your emotions to do the wrong thing at the wrong time. I know people right now, they're bargain hunting. We were at 2 weeks ago, we were at a social event. There was an elderly couple we know very well, very nice people. He's got a 401k, and he said, what should I do with my 401k? But he didn't know what he had in it. In fact, I've asked for the last 15 years, I've asked probably 500 people or more, do you know what's in your 401k? And no one knows. I haven't met one person who knows what's in their 401k. And I told him, if you do one thing tomorrow morning, get all of your money in whatever it's in right now and put it into Treasury bills, short-term Treasury bills,
right,
because the next several months are going to be very tumultuous in the market.
And I understand that, but you know what I'm saying is they're so used to taking advice, and how do they know if your advice is good for them or not? That's what I'm getting at. So but I want to get back to one more thing. I want to recommend people read the Wellington letter. You know, you've been talking about reading, and Bert's not paying me a commission for this, but I would go to domancapital.com. First thing I would subscribe to is the Wellington letter. How much does that cost? I misquoted the price.
It's $49 a month right now, which is the greatest bargain. The price is going to go up very, very soon because it's been that same price over 10 years.
So I'm just trying to say, please start with Bert's letter. It's not necessarily easy, but it's clear, it's simple, and he explains. And he's the guy that's been warning us for years. So if you really want to get ahead of the game, the thing I love about the Wellington letter, it's up to date, moment to moment. You really have to change your format because it's changing. The economy is changing so fast, right?
You know, Robert, yes, it used to be a monthly. Now we put out 3 to 4 issues a month. Even Sunday night, before the Monday crash this week, Sunday night, we put out an issue. Sunday night at 9 o'clock, we were sitting there putting out an issue of the Wellington letter. Now, that is a service beyond what anybody expects, and we always try to deliver more than is expected.
Right. So once again, we're talking to Bert Doman. He is the professional. He's a professional trader. He's more than that. The guy is a futurist. He is the pulse on the market. He sees it coming before it happens. He's been warning us about China for a long time. And now you stay warned. We also have Melissa Marlin, who will step in case Bert and I say things that are not understandable. But we really want you to understand something, that most people are in trouble because they're sitting with old ideas in their head. If you're saving, like, Bert, we're from Hawaii, right? And most Asians have tons of cash. But every time I show them the chart of the purchasing power of the dollar, they can't believe it because they really believe that cash is the best. And I said, look, every time you print money, the value, the purchasing power of your dollar goes down. And it's really hard for them to understand because their mommy and daddy told them to save money. This is the last question. You brought it up. What would you say to somebody who believes, and you already mentioned, if I have a 401k, I'm safe? What would you say to them?
Well, I would first say, be sure you know what's in there. People don't even know if they have mutual funds, if they have ETFs, if they have stocks, if they have bonds. You have to know what's in there so that you can make some intelligent decisions. I'd like to say something. I remember I read your first book and you talked about real estate and positive cash flow. And I thought that was so intelligent because you proposed something that I had said for a long time. I said, you have to know what it is. Real estate, in many instances, is a liability and not an asset.
Right.
So you want real estate with a positive cash flow, and you know the definition of positive cash flow. It's happiness. And
amen, brother.
Exactly, and
it's a religion for me.
What's good about real estate is that you don't get your emotions involved. When a stock drops 30% or 40% in a day or a half a day, you check it out at the bottom. And I see that happening all the time. Do you know on Monday this week, during the 1,086-point crash, the night before, we had said the China market is crashing. And I said on Friday in our trading services, I said, watch the China market Sunday night. If China crashes, that means that the government cannot control the market anymore, and that means the world is going to crash on Monday. And I said, The equivalent decline in the Dow would be 1,300 points. What a decline 1,100 point on Monday, intraday.
You're losing your touch there, 200 points.
Yeah, 200 points. But really, this is what is. But real estate is a great investment if you have positive cash flow.
If you know how to do it, that's the thing.
Yes.
Well, this is the point right here, okay? I invest in real estate because I don't have the same brain that Bert does. I've taken those courses, options trading, stock trading, stochastic moving averages. My brain doesn't fit that. I have a slow brain. My brain likes real estate. Markets go up, markets go down, the cash keeps flowing in. Now, Bert, when the markets are going up and down, he's in hog's heaven, and he's making a lot of money. Then you look at what's inside your 401k. At that point, you'd better decide whether you're going to be a fundamental investor. I'm kind of fundamental. I just want money coming in and less money going out, whereas Bert is technical, which means he's going with the ups and downs of the market. Is that pretty simply said?
Yes. Exactly. I would like to say something because so many people have asked me over the years, what can you help me with in my investments? So we developed a program last year, and I don't want this to sound like a promotion, but we call it Hedgefolios. Go to our website, hedgefolios.com. There are 5 portfolios. You can replicate our model portfolio. If you look at it, what it is, if you like it, you just click, and your portfolio is lined up with ours. It's that easy.
So please,
let me just say here from beginning of July to, I think it was yesterday, we did the calculation, the portfolios were up from 6% to 9% in those 7 weeks. While the stock markets of the world were plunging, we were up instead of down. So that shows you something. And if you choose any financial advisor, always ask, how did you do in 2008 during the crisis year? If they lost money during that year, I think you should continue looking somewhere else.
So, Melissa, final question for Bert here.
Well, I would just ask, and you guys have been we talk about the 401k. It's back to school time. That's most people that's all they're dealing with right now. They're just in survival mode. I got to get my kids in school. I got to get to soccer practice. Bert, I know it's falling, but what can I do today? Couples are fighting. I'm talking to my own friends, and they're like, listen, we had an argument last night. I told my husband we got to get out of the market tomorrow, and he says no, we can't afford to take the hit. I tell him we can't afford to stay in. What's the answer?
The answer is that you get a source of continuing advice, the best advice that you can get, advice that has been good over the years. We have caught every important market decline over 38 years. Now, that is a track record, okay? And that's what you want. You don't want to listen and act on just what you hear on TV, what you read in a newspaper, or something that's just one time. Because you need to follow up.
Bert, let me ask you this. How many financial planners can do what you do?
Well, like anything.
How many, Bert?
How many doctors are really good? Maybe 10%? How many brain surgeons are really good?
You're generous. You're generous. You're generous. Most financial planners have no idea what you're talking about, and that's why we got to run. But I really thank you for being on this program. Right. I hope everybody has been disturbed enough to say, maybe I better take control of my own money rather than just leave it up to somebody I don't even know. So, Bert, Thank you very much for your brilliant insight, keeping it simple, and your contribution to all of us. So you want to hear this program again, go to richdadradio.com. And once again, I want to thank Bert Doman. He's a professional trader, been a friend for years. His website is domancapital.com. Look, you've really got to. I hate to shake my finger at people, but if you don't take control of what you put in your head, then somebody will put garbage in there. And like I was saying, you can't put 2 cars in a single-car garage. And most people can't get out of their way because they still think saving money is smart. They still want to invest for the long term. And they think their financial advisor is really an expert. They're salespeople. They don't eat unless they sell you something. And if you lose money, they still eat. And you might not. And you can submit your questions to Ask Robert at richdadradio.com. And so let's get right into it. Melissa, what's the first question for Ask Robert?
Our first question today comes from Callan in Fort Bragg. Favorite book, Rich Dad, Poor Dad. He says, I'm 18 and just finished your book, Rich Dad, Poor Dad. It's a great book that really opened up my mind, but I'm confused about the friendship part. You say birds of a feather flock together. So how do I start finding rich people to learn from? Everyone I know is in the rat race.
Right, and that's a very good question. And that's why the story of Rich Dad, Poor Dad is a very pertinent book. Lesson number 1 in Rich Dad, Poor Dad, most people miss it. Lesson 1, chapter 1, the rich don't work for money. The people in the rat race are working for a paycheck. They're screwed. They'll never get out of that until they change their mindset. The other thing Bert says, you've really got to read different things. So I'm constantly reading. I would start with Bert's letter, subscribe to it. It may give you a sense of the future, but you got to put financial words into your head and not the garbage they have around you. So you start by changing you. If you change you, you can change your friends, and you change you by putting different words inside your head. If you're reading, if you're watching soap operas and all that, and the Jerry Springer Show, you're probably going to be just like those people on the Jerry Springer Show. Next question, Melissa.
Our next question comes from Emmanuel in New York. Favorite book, Unfair Advantage. What differs a small business owner from a big business owner?
Their mindset. And the IRS says that it's 500 employees, you're big, and you're less than 500, you're small. But most of it is just mindset. And most people are small because they're hands-on people. They're called craftspeople. The people who fix your shoes and come in and fix your plumbing and stuff like that. They work with their hands, or they work with their minds. They do it themselves. Whereas I don't do anything, so I have to have other people do things for me. So it's really a mindset and a skill set. It's very, very different. Good question, though. Next question, Melissa.
Our next question comes from Crystal in Los Angeles. Favorite book, Rich Dad, Poor Dad. What are your thoughts about the possibility of a bail-in, not bail-out, happening in the U.S. and the potential coming crash as you predicted in or around 2016?
First thing I would suggest you do is either read my book, Second Chance, which came out this year, but also I have a video called The Man Who Can See the Future. And in there, you'll pick up some financial terms and conditions and their pictures most of the time, so you can understand why the economy is going the way it is. But the question on a bail-in is this. A bailout is when the government gives the bank money. A bail-in is when the bank takes your money. So if they have $10 million in savings, the bank just takes your money and pays their bills with your money, your savings. The odds of the United States doing that are very slim because we have one big thing small countries don't have, is we can print money. The reason Greece is in so much trouble is they can't print money. U.S. is no different than Greece. We're bankrupt. We can print money or borrow money to pay the interest on our debt. Greece cannot. So if a small country or a small bank has no money, the bank won't bail them out, then they'll take the savers' money and pay their bills with it. That's a bail-in. Next question.
Our next question comes from Rose in California. Favorite book, Rich Dad, Poor Dad. She says, we rolled our retirement funds into self-directed Roth IRAs a couple of years ago and converted our holdings into silver American Eagle coins. Are the experts suggesting we are still at risk? If so, we'd rather take the 10% penalty than a possible hit or 100,000% loss.
I would take Bert's advice. You've already taken bad advice of putting it into a Roth IRA. And I'm not saying it's good or bad. You can only do what you're capable of doing. For example, I use debt constantly. I'm probably $500 million in debt. But I practice doing that. I'm good at it. If you're not good at using debt, don't do it. So you're probably, for your level of education and experience, you're probably doing the right thing. But as Bert said, if you want to change what you're doing, you better change what you're reading, and don't do anything with your Roth IRA right now until you know what you're going to do next. Next question.
Our next question comes from Griselda in Arkansas. Favorite book, Rich Dad, Poor Dad. She says basically this: help. How do I start over after a bankruptcy?
Well, bankruptcy, you got to know the differences. We have a program on this. When Trump says he declared bankruptcy, that's corporate bankruptcy. That's good. He said it on television. It's a tactic. It's a strategy. It's a way of protecting your real wealth. And then there's personal bankruptcy. Unfortunately, without financial education, most people file personal bankruptcy. I've read a story where this one person was $2,000 in debt in a credit card and declared personal bankruptcy. That goes on your record for 7 years. we were talking about, should you go to school? Because of student loan debt, 7 million people, young kids, are coming out of school with bankruptcy on their minds. That's personal. That means for 7 years they're hosed. So that's why financial education is crucial. That's why I thank you listening to the Rich Dad Radio Show. You can pick these things up. But unfortunately, if you're in personal bankruptcy, I would say it's very serious, and I would talk to an attorney to get professional legal advice. So what's the last question, Melissa?
Our final question comes from George in Miami, Florida. It says, how do T-bills and treasury bonds work?
Once again, that's what I would subscribe to Bert, because that's his expertise. Look, understand there's debt and equity. So when you have a T-bill or a T-bond, that's technically debt, but it's your equity. In other words, you're putting your equity into debt, and somebody is going to pay you the interest for the use of your equity. Bert recommends that. As I said, he and I are on opposite sides of these things. I would rather be a debtor than a saver. Bert would rather be a saver than a debtor. So I stay completely away of T-bonds and T-bills because I'd rather go and borrow T-bonds and T-bills rather than save equity into them. So there's savings and there's debt, and I love debt, and that's why I'm in real estate. I love cash flow because every month the cash comes flowing in, market goes up, market goes down, and I smile all day long. But the people in the stock market, what goes up must come down. And that's the theme of our show. So you got to know the difference between cash flow and capital gains. When going up and down is capital gains, cash flow is just pure heaven. So you can submit your questions to Ask Robert at richdadradio.com.